All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thanks so much for taking the time out of your day to join me this morning and every morning, 9 a.m. Eastern Standard Time. Let's get into it. Bottom right hand corner of your screen, there's a little black logo. Click on that. Turn on notifications. Subscribe to our channel. Make sure to like our videos. Takes just a millisecond to click that like button, that thumbs up. Appreciate it as always. Let's get to work. Dow futures up 375 points, up 1.27%. Nasdaq up nearly 2% this morning. 37.48 for the S&P, up 1.5%. We're also up 1.76%. Crude oil continues to bid 2.33%. Gasoline futures up 3.79%. Thank you, dollar. The dollar is down 0.71% at 110.95. 10-year Treasury yields, we'll go over that here in a second, 33.6%. We're far away from that 4% level that we were. Well, nice below that. Volatility index down 3%, 29.15 below 30, which is nice. Gold futures up 1%. Thank you, dollar. 17.20 an ounce. Silver, $21 an ounce, up 2%. Let's go ahead and take a look at Forex land. Euro dollar bidding 95 pips, 99.19, right below parity level. Dollar yen is up 14 pips, 144.75. Pound dollar 113.80, up 59 pips. Bitcoin futures above 20,000 and 1350 for Ethereum, up nearly 3% this morning. There we are with the futures. So let's go over the upgrades this morning. Seems like everyone on Wall Street now is kind of doing an about face, thinking that we're going to have a rally. We talked about that seasonality trend, October being that rally, but don't forget, we've had a lot of bad things that happened in October. Historically speaking, you had the 1929 crash in October. You also had the 2008 mortgage meltdown as well, and the 1987 October Black Monday. That was on October. So that does skew the numbers a little bit in terms of historically speaking, those were big moves. But again, October seasonally is better than September, excuse me. But again, we do have midterm elections. So let's go back to that. Let's go ahead and bring up the seasonality chart. Let me go ahead and minimize this. That's not what I wanted. Damn you, Bloomberg. Let's go to desktop. We'll click that. We'll click on the seasonality here. There we go. Do I have the space to do this? Oh, here we go. All right, here's your seasonality chart. Again, here's where you are. This is where we could go. Doesn't mean it will, but it's something to look at. So again, blue being the midterm election year, pink being the average year. We do have a midterm election on the first Tuesday of November. That's about a month away or so. So again, we do have an expectation of a nice rise in October after a very, very weak September and a very weak year in general, the worst year for stocks and bonds together in history. So making records. But as everything else, everything is a cycle. We go back and forth, back and forth. And us as traders are trying to catch those moves. That's all we're doing. As an investor, you're just riding the waves. That's really it. As long as the boat doesn't sink. Let's go to the Wall Street calls of the day, upgrades and downgrades. Anything that stands out here, JP Morgan reiterates Disney as a buy. They lowered its price target on the entertainment giant to 145 from 160. Noting it still likes the stock, but the investors should be patient. While we like Disney shares today, this is a quote, after the recent market downturn, we would be more excited to buy following FQ, this is the quarter four results, fiscal Q4, given potential commentary for higher than street expected OI losses, higher than street OI losses for operating income, mind you, 2023 and 2024 in direct to consumer DTC. Bank of America reiterates Meta and Alphabet as top picks. How about Meta? You know, Meta's been going through the ringer, one of the worst performers in the S&P this year. Bank of America lowers estimates on Meta and Alphabet to account for a mild recession. We are in a recession, mind you, but again, they want to say mild to now. But said the two companies are still top value picks. We have three takeaways from our analysis. Number one, this is from Bank of America. Street estimates for Alphabet and Meta advertising revenues are likely too high for 2023. AVOD and TikTok competition could capture $5 billion from industry growth. And number three, much like 2009, we see potential for strong EPS resiliency for Alphabet, and that's the parent company of Google, and Meta for cost cutting in 2023. UBS upgrades Domino's to buy from neutral. We also have Citi provides a positive catalyst on JP Morgan. I am a shareholder of JP Morgan. I'm a shareholder of Meta, Alphabet, and Disney. So just a heads up. In regards to JP Morgan Chase, Citibank said a third quarter earnings beat on JP Morgan Chase on October 14th will cause the stock to pop. We're opening a positive catalyst on JPM as we believe a 3Q earnings beat on the top line, which is coming very soon in about 2 weeks. JPM's earnings. As you know, the banks are usually the first ones to lead on new earnings season cycles, will lead to upward revisions on full year guidance and imply a better run rate into 2023. JPM, I was watching yesterday at the office. I wanted to play calls since financials have been beaten down so much. I didn't do it, but we played SPY. We caught SPY yesterday. We also caught Micron. They were upgraded this morning. I have that on my phone. Let's see if I can find that here. And here we go. See, Micron is up pre-market 3%. Micron pledges up to $100 billion for New York semiconductor factory. Good news. Wells Fargo downgrades Paramount to equal weight from overnight. Anything else here? Deutsche Bank reiterates Tesla as a buy. Quote, as a result of Tesla's new shipping strategy, we do think that a number of vehicles in transit could grow in the next few quarters. About Tesla, I also own Tesla. I had a question on the Discord yesterday on our Premium Signals Discord chat about Tesla. And then that's something that I kind of talk about a lot is when you look at Tesla, you have two ways of looking at it. Are they an automaker that also makes technology stuff, technology, you have SpaceX and all that good stuff. Are they a tech company or are they an auto company? If they're an auto company, they're way overvalued. If they're a tech company, they're just about right with tech growth. I personally see them as more as a tech company that makes automobiles, just the way I see Apple's not a phone company. Yes, half of their revenues come from the iPhone, but they're not a phone company. They're a technology company. They're a consumer technology company. I kind of put Tesla in that same boat because Amazon is not only just a store, they also have cloud, AWS, which is very profitable. Google is not only just a digital advertising, they also have YouTube and they also have their phone. So again, I like Tesla for the fact that, again, not at this stock price in particularly, it's not in an up day, but again, Tesla, you have to look at it in the point of longer term growth. You're going to have some ups and downs, of course. And there's so many derivatives on Tesla, which really cause it to be volatile. But again, you have to look into the prism. Are they a tech company or are they an auto company? If you see them more as an auto company, then I would not want to own it because it's just too darn expensive. You can get Ford, you can get Toyota, you can get GM, hell of a lot cheaper. Even Porsche has a new IPO if you're into that. But for the most part, I see them as a tech company that just makes automobiles the way that Apple is a tech company that makes phones. Apple makes more than just phones, but again, that's their big earnings. Same thing with Tesla, it makes cars. Citi opens a positive catalyst on Schlumberger. Again, Wall Street is very bullish on oil companies. We've been talking about Chevron. That's something that I own. Deutsche Bank reiterates Block as a buy. It seems like with a new quarter, all the analysts are coming out being bullish after having a horrible Q3 and a horrible 2022, let's be honest. So Deutsche Bank reiterates Block as a buy. They say that the company's cash app is a sleeping giant. JP Morgan has reiterated Amazon as overweight. Morgan Stanley names Taiwan Semiconductor as a top pick, and Moffett-Nathanson reiterates Netflix as market perform. So a lot of good updates there this morning. Let's go ahead and do something that I haven't done in a while. We'll go to some pre-market quotes here on investing.com and see what's moving this morning. Tesla is up 3% this morning, as you know, with that upgrade. Let's go ahead and take a look at the Dow. Apple up nearly 2% this morning. Boeing up 2.5%. Microsoft up 1.68%. Nike up 2.26%. 3-day rule now on Nike. Remember, 3 days after that really big tank job since Thursday. Now we're starting to see if we can buy some Nike here. Walt Disney up nearly 2% on that upgrade. How about JP Morgan? 1.85% on that upgrade as well. Nvidia up 2.5%. AMD up 2.81%. That's nice to see on the semiconductors. And they don't have Micron this morning, but it's 3%. Amazon 3% this morning as well. So a lot of tech on price upgrades, which is also very nice to see this morning. Let's go ahead and talk tape. We'll bring up the S&P futures this morning. And you could see right here, this yellow line, 37.44. There's a reason why I have that yellow line. That could be our resistance. That right now, as you can see, that was the previous support that we did had after we broke down to the new June lows. So again, if we can kind of that's the last consolidating candle that we had after that big breakout. Could we start moving a little higher or rally into this futures move? So again, really what I want to see, if we want to see continuation, is right above 37.77, 37.75. 37.50 was really my level I was looking for yesterday, where you could start seeing that, hey, maybe a bottom is in. In terms of the daily, the 20-day moving average is something I look at a lot. That's 38.39, so 38.44 or so. Again, that would be a positive catalyst. But I think really the big level that everyone needs to watch for is that 3,900 level. 3,900 is pretty much, in my opinion, the target you're looking for if you're trying to stay long. That's a pretty big move. You're talking about 300 handles. You're going to start getting to overbought RSI as well. So again, the sharper the moves, the sharper the sharper the moves, the sharper the chance that you're going to get a reversal, as always. So again, you're not going to get a green shoot all the way to 4202. You're not going to get a green shoot to 4,000. It was a nice day yesterday. So far this morning, it's nice. But again, 38.44 is that 20-day. So again, that would be an important psychological level to break above on the 20-day basis, since I do use the 1-hour candles of the 20-day chart. But again, 37.50, I want to see if we can hold there. If we can get above 37.77, 37.80, then I would start targeting 3,900 for a continuation. Again, we're starting to see a little bit of easing in terms of yields. So let's go ahead and take a look at bond yields. Again, they're going to give us the roadmap. We'll go ahead and take a look at the 3-day chart this morning on 10-year yields. This is the 2-year, excuse me, and you could see just nice going down. That's exactly what we need. If we go on a month-to-month basis or 1-month basis, you could see that we still have a little more to roll over. 4% being a key support, psychological round number theory support. So again, 4% on a 2-year. I'll be watching that today. If we can break down there below 4%, 3,900 seems to be in the cards as we have a gap to fill right around 3.8804. Let's go to a 10-year this morning on a monthly basis. Monthly chart here, support. We're now below 3.6. Again, you can kind of use the round number theory as well, but again, I have a support here around 3.52. There is no gaps to fill, at least on a yield basis. But again, 3.52, that's kind of the level I'm looking for. But the 2-year below 4 would give me a lot more solace than the 10. Really, because that's more of short-term expectations of inflation and the Fed. Interesting enough, this morning, we did get word that the RBC, or RBA, excuse me, RBA is the Central Bank of Australia. They only raised 25 basis points. Could that be the catalyst, or maybe kind of the front running of the central banks kind of pulling back a little bit, tapping the brakes on rate hikes? Maybe. We'll see. Futures tend to are loving it this morning. But again, if yields can continue to go down, that's what I'm looking for. That's the key. Yields will tell us where we're going. The equity market will follow the yields. Period. End of discussion. That's really it. So again, the 2-year yield. Again, you could see this on CNBC or TradingView or what have you. We'll keep that there right around 4%. That is your support. You can see we bounced right off that this morning, right around 530. So again, if we can break down here, we're seeing inflationary pressures come down. We still have a lot to go, but again, could we get some solace from this oversold reading that we had on S&P futures? Let's take a look here on the daily. We're now at a 42 RSI, still below the 50 level. So let's go ahead and bring up the weekly chart here. And you could see, wow, that 200 MA. How key is that? That 200 MA here. Man, could that be it? Remember we talked about that 200 MA on the weekly for a while now. That was like 35.20 for a while. And then we had this nice rise, this bear market rally. And again, in bear markets, guys, that's where you have the best market days. A lot of people think that, oh, the best market days happen in bull markets. Not exactly. It's bear markets where the nice single day best days of the market happen. So that 200 MA right now, 35.75, 35.80, that has to be your stop if you were going long, because of the simple fact that that is a key moving average. We stayed above it. We kind of broke below, again, just like all types of support. They're like a mattress you could sink in. What I want to go ahead and add a ton of exposure here. If we didn't have non-farm payroll on Friday, I would say let's go ahead and get started. But again, I want to go ahead and wait for that first. So again, that is on Friday. I have no problem waiting. Again, the market will always be there. You don't have to catch the exact bottom every single time. But it looks like here that a bottom could be reached as we have just the most negative sentiment that we've had pretty much since COVID. And we know what happened there. Let's go ahead and take a look at a 5-year chart on Nike. 3-day rule, again, like we talked about. We'll go ahead and add some moving averages on this Bloomberg chart. Let's see here. We're going to go to settings, edit chart. There you go to studies. We're going to go to studies. And then we're going to go to, and there's a ton of good stuff here. This is what makes Bloomberg worth it. Simple moving average. We're going to go to add line. We'll go to update. We have our volume chart here. I don't need that. Let's do that. So now we're on a 5-year basis above below the 200-day. And you could see that anything that happens below the 200-day is not a good look, as we know. But again, now where is support? Where are we looking at in terms of support? We got now about an 87 or 87.41 ask price on Nike. It's trading at 85.40 currently. So support here, you could look here around 80 as support so far. If you can kind of maybe look a price around 80 to 85, that isn't bad to start nibbling on the Nike brand. They do have a lot of inventory, but we do have the holiday season just this quarter. So again, could we start taking a look at those COVID lows around 63? Absolutely. That is pretty much your last call. But again, I think 80 holds up. I like Nike here long term. Again, Nike being such a popular brand, when it comes to stocks, yes, they may be disconnected from the company. Nike is still a strong company. The only issue that you can have with Nike is that it's a big bet on the dollar coming down and China. So if China can turn it around, get some more manufacturing going, obviously we're getting some kind of reopening over there. But Nike does pay a decent dividend. But again, here at this price around 80, I don't hate it. I kind of want to add some more there. So let's see if I can catch a good price. Maybe we kind of fall back down a little bit or so, get a little volatility, get to around 80. I'm a buyer of Nike there, and we'll see what we get. Let's answer some questions. I feel like I feel a bull trap. And again, the bull trap thesis, and I agree. I can understand everyone's very gun shy. And again, that's why I'm not saying, oh, we have to go run and buy calls. We have to run and go buy stock. No, I don't like buying stock on an up day, and I really don't want to sell stock on a down day. Those are the two things that I watch for. Again, we're right at a level that we haven't seen since last Wednesday. So again, not too excited. We're just in the top end of this new range. If we can break above 37.62, which is our recent high overnight or this morning, then again, 38.44, 38.50 was the 20-day moving average on the daily. Let's go and take a look at it. 38.39, excuse me. So if we can get to 38.39, 3,900 would be the key resistance. That was the level that we broke below. We had a nice little pop, and then we finally broke below. But 3,900 is a key level. Until that breaks, we can't get too excited because we're still just stuck in a bottom end range here. I don't get the bears thesis. LOL. The market reflected a recession Q1, Q2, hence the pullback. SPX has checked back to bear market territory, is now bounced off the 200-day. That's true, which historically been support. Chad is saying it exactly what I've been saying. If you guys have been watching the morning note now for a while, we were talking about this, I think in Q2, Q1 this year, that 200-day on the weekly or 200 MA on the weekly was around 35.20 or so. We didn't get there, but we got to the 200-day, 200 MA because the stock and all this moves that we've been having. So again, the MAs are going to change based on recent price. But you're right, that could be the support that we're looking for. I mean, it is holding. In 2008, we broke below the 200-day. We were still below the 200-day on or 200 MA on the weekly in 2008. This time we're not. So again, the analog may be a little different. Again, we don't have the big systemic crisis. I know I've been hearing a lot of Credit Suisse, but I haven't seen anything that would say that this is a Lehman moment of any kind. Now that may change. We'll see. We still have the Ukraine-Russia conflict. That hasn't changed. So again, many moving parts. We have earnings coming up. Let's keep the expectations low, especially for the mega caps and the tech companies, for the simple fact that the dollar is going to affect their earnings. Remember that. Very, very important. So don't be surprised. You'll get some, some misses here and there. Maybe the bar set very low. Who knows? But it'll be an interesting earnings reports that we'll be getting in about a couple of weeks. Non-farm payroll, the labor market is very strong. That's going to put pressure on the Fed. I know the RBA in Australia just only did 25 basis point hike. That'd be nice to see in the US. That would show possibly a pivot or not a pause. But again, the Fed is a different beast. It seems like they're leading the way of a hawkish world in order to combat inflation, which is completely fine. That's what they have to do. That's their mandate. But again, the acceleration is the key. Again, we're going to keep an eye on the 2-year yields. We're going to keep an eye on the dollar. That's where we need to see if we can hold and if we can break below 4% on a 2-year. I think that gets us enough to 3,900 on the S&P 500. Let's take a look at the dollar. How about the daily? Again, we talked about this yesterday. Big pop and then a drop. We're right now at the 20-day. The key level you're looking for is 108.75. We're not there yet. If we break there, 3,900. So all roads are pointing to 3,900 if the 2-year and the dollar help us out. That's it. Keep waiting and waiting. You'll miss your opportunity. That's really what it is. If you're a long-term investor, everything is an opportunity. If you're a short-term trader, then it's completely different. So again, the trading hat and the investing hat are two different things. Again, you're at a point where sentiment is one of the lowest points since 2020, 2008. And so again, you're buying when no one wants to buy. And that's really the saying. When it's time to buy, you won't want to. What will make the Fed pivot? The one thing that'll make the Fed pivot, the labor market. If the labor market gets weaker, if we start seeing higher unemployment, that's where you pivot. Until that happens, I don't see it happening anytime soon unless they completely flip the script, which they have. And remember, everyone is all saying that the Fed is gospel now. We believe everything they say now. Terminal rate being 5.5%. You think we'll get there? I highly doubt it. The Fed changes its mind that quickly. So again, it's kind of tough to be a bear here because you don't have a lot of upside. That 200 MA is key support right now. So again, if you're trying to short this market, I mean, you're pretty much just hedging at least at this point, but I don't see a lot of alpha to be generated until we break that MA on the weekly chart. We'll see where we go from there. Have a great rest of your morning. We're going to do a boot camp 18th, 19th, and 20th of November in South Florida in Doral. Kevin has all the details. You can DM him at GAR Capital on our Instagram page, or you can email us, garcapital@gmail.com. It's a 3-day boot camp. It's our first one. It's going to be kind of a pilot program. Kind of want to see how it goes. If we have some really great demand and a lot of people want to join, amazing. Then we can start setting up different ones in different cities. I would love to meet all you guys, shake your hand, talk markets, and just, this is the stuff I love, man. I'll bring my laptop. We'll have some fun. We'll talk about historical moves and averages and everything like that. It's going to be a fun one. So 18th, 19th, and 20th. It's the week after my birthday, so I'm super excited to do the boot camp with you guys in the Doral area. More details to come, and I'll see you then in person, but I'll see you tomorrow for the morning note. Have a great rest of your morning. Am I looking at any calls right now? Young Jay is asking me. At this very moment, no, but my eyes will be watching because all of this could be reversed, just so you know. So the first half hour, let's see. I do have runners on SPY, and I do have a runner on Micron. So we'll go ahead and see where we go from there. Micron was price upgraded today, so well done. Let's see how much we can go higher. If not, we do reverse. The dollar is showing us that we may get a little more upside in stocks. Have a good one, guys. We'll see you tomorrow. Cheers.